Ladies and gentlemen, again, another day and another red. The market is literally spiraling downhill, and it is kind of scary. But at the same time, we gotta keep a level head. And in today's episode, I think it's a little bit more important to stick to the fundamentals. So, what I'm going to do today is I'm actually going to show you and demonstrate to you what is called a book value, which is when you see what a stock is, like let's say the S&P 500 isn't really a good example. Let's just take example for Apple. When you take Apple and you see that stock, well, that stock is actually inflated by the market. That's not what the true book value of that stock is. That's not what that company's true stock value is. So today I'm actually going to show you and demonstrate to you guys how to use this formula using a real company. Another company that I want to show you guys that I feel is another good company to invest in even during these down times, and I'll get into it in a little bit. But I think the most important thing to do here is to start with step one of the three-part formula. So let's get over. Okay, so step one to this process, which is it's a step one of two in order to get to the actual book value, but there's also a third step, which is a very small minor step. I'll get to that at the end, but step one is talking about the future price formula. This is basically what the stock will be at a given year. So here you see the formula. You're going to need to get a few things first, and I will demonstrate this. I will show you this, how to get these numbers. And there's also a few things in here like growth and the exponent number of 10. Those are adjustable numbers. Those are customizable numbers, and I'll get to that here in a second. So the first one you're going to want to get is the EPS number, and that's very simple. The second number that you're going to want to focus in on is growth. Okay, so now growth is a little bit tricky because it's customizable or it's not customizable. If you want to use the standard method, which is what I like to use, which is what Warren Buffett goes on statement and says that he uses, I've gotten mine from the Intelligent Investor book, which I highly recommend. Warren Buffett also got that from him. It's a phenomenal way of calculating growth, and it's just a phenomenal book to read. It'll give you a lot of insight. However, growth can be calculated a few different ways. You can either take growth the standard way, which is how I take it and Warren Buffett takes it, which is the growth number is whatever the going 10-year, 20-year, or 30-year bond yield rate is, and that would just be what you would do. So you would use this formula. You would do this formula 3 times. You would do it once for the 10-year, once for the 20-year, and once for the 30-year bond, or just pick one, whichever one you prefer, and go for it. The second way of using growth is you can use growth as you can actually go into a company and you can yourself calculate what the average growth rate for that company was over 5, 10, 15 years. And then you can use that as your growth number. So there's a lot of different ways you can use growth. The third way, I believe you can use growth if you really want to, which I really don't like. I heard it once. I'm not a fan of it, but I'll tell it to you because I heard it, which is you can use growth if you feel like you know how much the stock can potentially grow over time. So I guess that would technically be an average of all the previous years, but you can make it also an educated assumption. Like, let's just take Skyworks Solutions, for example, because I'm going to be demonstrating that later. If you said, oh, well, I think Skyworks Solutions is going to go up 20% next year. Well, you can use 20% as your growth rate, right? But I really wouldn't go speculating like that. However, it's a way. Now the other third number is the exponent of 10. Now I use the exponent of 10 or the power of 10 just simply for easeability. It's just an easier number for me to calculate mentally if I really actually had to. But that number is actually customizable because that is how many years out you are going to be seeing what the base fundamental book value stock is. So in this case, once we plug in this formula right here and we get the numbers and we get our actual future price, this will be the future price. This will be the actual stock price 10 years in the future. And then the step 2 is bringing that future stock price back to present day in order to obtain the book value. So I use the power of 10. You can use the power of 2, 3, 4, 5, however many years you want to project the future growth of that stock performance. So that's just another customizable number. If you want to keep it simple, use 10 or 20, because 20 is another good years out for a company. The last number that you guys are going to need to get is another simple one, which is PE ratio, and I will show you that as well. So since we're done with that, let's hop on over to finding out how to get these numbers through Google. I'll show it to you, demonstrate it, so let's hop over there. Okay, so we're here on Google, and the first thing we're going to want to find is the 10-year bond yield. Okay, so just type in 10-year bond yield. You're going to get this. The very first thing that's going to pop up is 1.02. This is the current going rate. That's what you want to use. Okay, you want to try and use the most recent numbers for this, so that way you can have the most accuracy when it comes to this. So the next one we're going to want to get into is, what is the EPS number for Skyworks Solution? And Google search is going to tell us this. So type in Skyworks Solution EPS, and don't mess around with this number. This is some crazy stuff right here. Go down here to the NASDAQ market right here. Okay, and when you go down to the NASDAQ market, you're going to see back in December when they actually reported this in the fiscal year of 2020, the EPS was 1.50. Okay, so that's what we're going to be using. Okay, and that was for the most current actual 10K. So we're going to be using 1.5 for the EPS number for this current one. Okay, the next thing we're going to want to do is find out what the Skyworks PE ratio is. Okay, so just do another Google search, Skyworks PE ratio. Don't mind what the NASDAQ right there says. Go down. I like Y charts because Y charts is going to give you like the most current, up to date and accurate PE. So March 18th 2020, 15.13. that's going to be our PE ratio. Okay, so now we have our three numbers. Okay, we have our EPS, which is 1.50. We have our PE ratio, which is 15.13, and then we have our 10-year bond yield, which is at that abysmal level of 1.02%. Okay, so we're not really playing with a whole lot of fire here. So now what we're going to want to do is we're going to want to punch those numbers into a calculator using that formula that I showed you. Okay, and I'm going to try and do that here for you guys and not stumble over this and look like a complete idiot. So what I like to do is I like to start with the inside parentheses first. So what we're going to end up doing is, sorry, calculator here. I just want to check the bond yield and make sure I got my math right and I'm not going off on this. So we're going to do 1 plus 0.01, which is our 10-year bond rate. That's our 1.02. If you put it in decimals, it's 0.01. So that's going to give us 1.01. Okay, and we're going to want to do that to the power of 10. So when we put that to the power of 10, that's going to give us 1.10. We're going to just round it right there, make it easy. So 1.10. That is what we have so far. Okay, so now what we're going to want to do is just punch in the rest of the numbers. And what you're going to see is you're going to get times 1.50 times 15.3 or 15.13, sorry. And you're going to see that you get a future price of 24.96. Okay. Now, when I did to the power of 10, that is also another number that is customizable. The power number or the exponent number, that's simply how many years out do you want to see that stock value. So I use 10. I go 10 years out just because it's just an easier number to calculate in the calculator. So I don't really like doing 5 years, 8 years, 6 years. You can if you really want to. I just like to keep it easy and do power of 10. And what you're going to get is 24.96. That's going to give us our future stock price, okay? And that's going to segue us into step 2 of what this formula is. So let's get into that. All right. If you're still with me, congratulations, because you're going to get the rest of the formula. And 2, thanks. So the next step in this formula, step 2 of 3, okay? Now, this is where we actually get to the real stock price, which is probably what you guys really want. This is the true book value that you're gonna get. So the first thing you're gonna want to have with you is the future price that we just calculated. Okay, so that $24.96 that we just calculated on Skyworks Solution, that's gonna be your future price. Okay, now you're just gonna divide that by the 1 plus growth over the power of 10, which we already calculated, which is 1.10. So all you're doing really is just dividing 24.96 by 1.10. Okay, so what we're going to want to do is come over here to our calculator, get rid of this because we're done with that number. Actually, you know what? No, forget about it. 24.96, we're going to do this the hard way, divided by 1.10. Now this is going to give us our actual true stock price. Okay, and we get a price of $22.69. Okay, now this is the price that Skyworks Solution is actually rated for, without all of the Wall Street market markup. Because when you pay the actual sticker price for Skyworks Solution, which let's actually find that out right now. So Skyworks SKW, I believe, if I don't have any lag, which is SWKS. Yeah, Skyworks Solution. So the $75, or actually $72.10 that you're paying, that's actually still an inflated number. So if this stock right here price actually dropped down to $22.69, then we would actually be at book value price as of today's standards, today's value. So the fact that you're getting it for $72 isn't too terrible, because that's actually going to segue us into formula number 3, which actually doesn't really have too much of a formula to it. What it basically comes down to is you have the book value number now, $22.69. From there, you can customize it again to whatever you want, really. You can customize it to, okay, well, now that I see that, well, how much am I willing to pay more for the stock? Am I willing to actually pay $50 more? Am I willing to see? There's a lot more you can do to it. You can add a risk factor, so you can even be more stringent and say, we're in really bad economic times. I want to have even more of a buffer, so I'm not going to buy this stock unless it takes even a 10% drop under the book value stock. So then you would just take your book value of $22.69 and just times that by 10% and deduct it from $22.69, and you would get your 10% buffer zone. So you can play with that number several different ways. Whatever makes you feel comfortable and whatever fits your investing style. I'm a pretty aggressive investor myself. I do go after companies that have strong balance sheets, which is why I'm suggesting Skyworks. Skyworks' balance sheet is probably one of the best I've ever seen. They don't even have debt. It's insane. I mean, these guys store cash and they play in the 5G market. So that's really what I wanted to take you guys to, which is Skyworks Solution. Because Skyworks Solution, if we just go here, Google, I like to start over because I'm just weird. So Skyworks Solutions. If you just go into their Skyworks Solutions page, they're amazing. This is going to be one of the biggest players in the 5G network, and they're going to be supplying chips and be in this market space from years ago. So really getting this at the price that we're getting it right now, if it comes down a little bit more, I'm probably going to start buying. If it comes down into the 60s, because that's where I originally started purchasing at, was in the 60s. So if it comes down around where I started purchasing before, then I'm going to start, heavily investing. But even at this price, man, you can't really beat it, because Skyworks Solutions only going to win, and they're not going to be too damaged by this recession. So this isn't a company that has, the bankruptcy word floating all around it and bailout floating around it. Okay, this company's just fine where it's at, which is just another reason why I wanted to suggest this company to you guys and break down how to use just another formula, just another tool, which really at the end of the day, as an investor, the more tools we have in our arsenal, the better. Do I use this book value formula for every single thing? No. But is it a tool to have? And is it a good tool to have? Yes. Warren Buffett uses it. It's in the Intelligent Investor book. I mean, it's just a tool that I believe every long-term investor should be equipped with. So I do hope you guys enjoyed this. I hope you guys at least took something away from it. And I'm sorry I babbled on, but hey, it is what it is. So please like, subscribe, follow, all that good stuff. And I appreciate the support and everything else you guys do. So I hope you guys have a good day and stay safe out there, huh?